As the world becomes increasingly interconnected, the primacy of the US dollar is starting to lose its grip. Many countries are reducing their use of the dollar, causing concern among supporters of capitalism and the US. We'll explore the reasons behind the dollar's decline and the potential impacts on the American economy. From geopolitics to shifts in global trade, we'll examine the factors driving this change and what it means for the future of the US economy. The US dollar has been the dominant currency in the world since the end of World War II, but its primacy is now under threat. Welcome to Top Trends Online. Let's continue. The process of losing its global position is already underway, and while there is disagreement about how fast it will happen, most agree that it is inevitable. The use of the dollar in international trade has given the US a considerable economic advantage over the years, but this is now diminishing. Other countries want to share in the benefits of having a dominant currency and are taking steps to achieve this. One significant factor contributing to the decline of the dollar's primacy is geopolitics. Other parts of the world no longer want to produce valuable goods and services and exchange them for dollars. They want to share in the benefits of having a dominant currency by developing their currency's importance. The most important steps taken in this regard are by the BRICS countries, Brazil, Russia, India, China, and South Africa, which account for almost half of the world's population. These countries are exploring non-dollar-based trade among themselves, with China's yuan emerging as the most powerful currency among them. Another tangible change is the recent agreement between Iran and Saudi Arabia, brokered by China. The two countries have been hostile towards each other for decades, but China has managed to overcome their differences, and they are now opening embassies in each other's countries. Saudi Arabia, which is the world's largest producer of oil, is also trading more with China than with the US. This shift is crucial because oil trade used to be conducted in dollars, requiring everyone to hold dollars. China and Saudi Arabia are discussing trading oil denominated in the Chinese currency, which is likely to reduce the value of the dollar in the coming years. The decline of the dollar's primacy is likely to result in several changes. First, imports into the US will become much more expensive, driving up prices and causing inflation. This situation will also shift the US's economy, making it more dependent on exports, which will become cheaper for people buying the devalued dollar. The shift will be challenging, and if not properly prepared for or managed, it could lead to a crisis. It could be as serious as the crisis that threatened the collapse of the American banking system in recent years. It is essential to come to terms with the reality that the US is no longer the dominant player in the world, as it was for most of the last century. This long-term readjustment of the world is a difficult concept for Americans to grasp, but it is becoming truer with each passing week. If the US dollar were to collapse, it could have severe consequences for the economy, financial system, and individuals in the US and around the world. Thanks for watching Top Trends Online. Please share your thoughts with us by commenting down below.